Good afternoon, everybody. It is Sunday, March 24th. We are going to do our weekly commitment to traders report. Just to start off, a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future gains. We'll start, as we always do, with the SPX. The two big takeaways on this are that commercials have started trimming their position, and they've been doing this kind of ebb and flow now for the last several weeks, and our open interest dropped drastically. So the way that I view this at the moment is a distribution move as they push the market up, and we can watch for further distribution as we head into April and May, before a likely summer markup that we usually see in mid-June, July, before August and September. Quarter one ends this Thursday, and so markets are closed on Friday in observance of Good Friday. Or in observance of Easter for Good Friday. So just remember that a markup is possible as we head into that end of quarter for everybody's books. As we head into the end of the quarter, Bitcoin has now made another clear setup, the same thing that we saw happen back in January. Commercials distributed their position as we had laid out last week would be likely, and we'd see a markdown. And that's exactly what happened for them to rebuy. So commercials are near max long again as we head into the end of the month and Bitcoin OPEX. And so we've seen this play out where they build a position, distribute it, reaccumulate about 10 to 20% lower, distribute again, reaccumulate about 10 to 15% lower. And it's likely as we head into the quarter right now, this is becoming a pretty clear setup that we'll have our levels, and I'll post some in our professional and elite rooms. But a markup to all-time highs as we head into the end of the quarter here is likely as well. New addition to the list this week is silver. So hi-ho silver. All signals right now are aligning for a short-term shakeout. Remember, again, month end and quarter end is going to be a big factor on a lot of these. The big levels to know on silver are going to be 25,615 and 24,713. You can see here that we are near max positioning for large spec and commercials on both sides. So we've got a crowded trade on the long side here. And all of our duration scores are saying that these are near extremes. And so this, again, is becoming one of the more clear setups that kind of arose pretty quickly. And you can see the last three times that we've had these large positions, crowded moves, where the pain trade is going to be to the downside for large spec. This happened July 18th, November 28th into December 5th, and now current. And we had each time so far, this has started that move lower. And so we want to be aware of that. And again, your big levels 25,615 and 24,713 as we head into the week ahead. We did get our move, as we've been talking about, to oil. We've now gotten over the 82 level, which was the target. And just to follow up on gold, we stated in last week's video that 2166.6 is the major level. And until we're under that, we want to be cautious getting short too soon. And that played out on the FOMC this week, where we got back over that 2166. And for those that were live, you saw the trade there from 2166 over 2200. And we called that out real time. And now we'll watch that again as we head forward. That's going to be the big sign to watch, because again, commercials are very, very short, net short. And the last time we had this, same thing happened in April when we were at these same levels. We spent a few weeks sideways, March and April, but then went down, had more of a V shape or inverted V, I guess, move on in December heading into the new year. And now this could be playing out the same way that last March and April did. But we'll keep posting our levels for you, for all our subscribers. To go on to the currencies. So we'll go in reverse alphabetical order here, and we'll start with the Swiss. The Swiss cut rates and therefore devalued their currency. I definitely didn't have that on my bingo card heading into the week. But as long as we use the levels, that's what kept us safe. So as stated in last week's video, $1.141 and then $1.134 were the two big levels that had to hold for us to take the trade. That's this blue level here in yellow. And when that doesn't hold, that was our sign last week, as mentioned on the video, that there would be no long trade if that's what occurred. Now we're coming back right into where we had built that accumulation in October before the markup. And so we can watch those levels, but the clear trade's gone here. It never really showed up. We had a very short-term move on it, and then it dropped. And so we have to wait for this to get a little more clear. We are getting near 3-year levels on this, and we'll watch to see if those now get extended, and we'll have to restart the timer on the bottoming process. But one that we did not miss at all was the British pound. Again, this worked out beautifully, especially on the live sessions this week for our subscribers. I laid out real time the only currency that I was willing to trade and the entry for the move at 127, and I'll show that on the next. But again, commercial is very short. We were looking for the drop. The easy move, easy money's now kind of gone here. We should continue to see that, but this was the move we were looking for. Nice 2-day move, very strong. Basically 2 days wiped out several weeks of a move, and it was a really easy trade. So I had laid out that this was the big level at 1271. We did that on last week's video. And then on Thursday morning, I laid out that that was the only currency I would trade. I would short it on that level. And that trade worked out extremely well as we headed into the end of the day, Thursday and Friday. So now that the easy money's gone, we'll now replace this setup with the 6A. And again, this one was mentioned last week as a potential to be added. The two potentials that are still setting up are going to be the 6E and the YM, so the Euro and the Dow that are still being monitored. There's nothing clear yet on these, but same setup here. We can see commercials are very long, and we look for these signals when somebody is getting outsized, or when ideally you have both participants getting outsized in opposite directions. For the very clean and easy money moves. So the pain trade right now would be to the upside for the large spec. Remember, the commercials will win this game. There are some internals on this saying it could keep going lower, like the 6S. So we need to be aware not to rush into this too soon. But the same thing played out in September. You can see right here, September is the last time they were max long. And as we headed into September and October, then we bottomed out. Bottoming process starts, and then a huge markup. We'll watch for the same thing to develop here. Last time it was about a 10% move on the currency, which is very substantial. The advantage to the 6A is it does have a micro product that you can trade. So if you want to practice with currencies, this is a good one to get into. I will give a full analysis for elite members as we go through this in the next week or two. But the major levels on a macro perspective to watch are going to be 0.68545, 0.65925, and 0.65450. Those would be the three areas to watch. And then for the ongoing setups, I will post those for elite members on a regular basis, and then about once a week for the professional subscribers in our room. Again, the ones that we'll watch as we head forward are going to be the 6E and the YM. Probably the best setups as we head into the quarter are going to be Bitcoin and silver are the two that I'll be watching the most closely. And if you want to learn how to do this, or how to trade any instrument and be a go anywhere trader, whether it's equities, options, or futures, currencies, commodities, oil, metals, feel free to check us out. We're at StixTradingAcademy.com. We are also on YouTube, and we have a Discord room that you can sign up for. Have a great weekend, and stay safe trading out there.